Great.
Laura Rotter is a member of Bedam Shalom and the owner of True Abundance Advisors, a financial life planning and wealth management firm. Decades ago, I was aware of an investment strategy called socially responsible investing, which meant generally avoiding investments in firearms or tobacco. Then Laura held a lecture at the Terrytown JCC about ESG, environmental, social, governance investing. I attended, and she knew her stuff then, and she knows her stuff now. While ESG has become more, although not universally popular, even a powerful draw of which companies are very well aware. This evening, Laura will focus on the E of ESG, which is environment. It is now clear that pulling fossil fuels from the ground and burning them drastically destabilizes our environment. Laura will look at some of the activities of the companies we invest in, the banks where we park our money, the insurance companies whose policies we hold, and the credit cards we use. And she will touch on movements to divest from fossil fuel companies. So I'm going to ask you to please hold your questions until Laura finishes, and we will welcome them then. Laura?
Great. Thank you so much for the introduction, Judy, and for organizing this and frankly, all the work you do. And now I understand Bob and others in all the climate action. I'm on your distribution list and you are tireless in the work that you do.
Absolutely tireless.
So I'm going to start off by attempting to define ESG investing like Judy just did. And I'm going to share a slide on my screen. Can everyone see this?
Perfect.
So there's a continuum with values aligned investing, which is what I'm going to talk about tonight, and investing in the broadest range, to also include our bank accounts as well as our credit cards, as Judy mentioned. So there's traditional investing, which is you either on your own or with a financial advisor, you're just interested in getting the greatest return that you can on your money, what this slide refers to as traditional investing. But what I want to focus on is the continuum of the values aligned investing, as Judy said, and frankly, often started with the values of the Catholic Church, was do no harm investing. Negative screens, in other words, not investing in oil and gas companies, not investing in weapons production, not investing in, alcohol drink manufacturers, negative screens. So you say, I'm going to otherwise invest in what's known as the market, but I'm going to take out companies whose, that don't align with my values. And that has progressed to what Judy also alluded to is becoming a larger and larger part of the investing marketplace, to include companies that are actually doing beneficial work, perhaps, not a negative screen, but maybe saying, I want to invest in the manufacturers of what we were just saying, heat pumps. I want to invest in Tesla because they're an electric car manufacturer. I want, positive screens to understand that the companies that I'm investing in are actually working to do good in the world. And that, I would say, is level 2 investing. And there's now a big business around screening companies for their ESG cred and understanding more how your money is having a positive impact rather than just taking it away from companies you don't believe in. And then finally, level 3 investing is actually making private investments in perhaps smaller startup companies that have that are developing new solutions. In this specific tonight, we're going to talk about climate change. But that again is just the E, the environmental, in what is also social change that people want to see in the world, perhaps more equity and inclusion, perhaps more women on boards, et cetera. That's sort of a social lens, and you might invest in technologies and companies that are making a change that way. So all the way to, frankly, traditional philanthropy, which we're all very familiar with, where you're only prioritizing achieving an impact and you're not looking for any return on your investment. So as Judy mentioned, ESG investing is becoming a larger and larger part of the investing marketplace. I don't want to spend a lot of time on statistics, but I just want to make you aware that according to US CIF, which is a nonprofit organization that tracks these things, 1 of every $3 now that is managed professionally or invested in sustainable assets. And 77%, right? So over 3/4 of institutional investors claim that they plan to stop investing in companies that are not considered sustainable. So this is good news. We're living during a time where sometimes it feels like there's a dearth of good news. So I do think this is something to celebrate. And I just want to share 2 other data points. Just last week, the Securities and Exchange Commission, so you've all heard of the SEC. I was an institutional investor for many years. I depended upon financial information filed with the SEC quarterly by companies. Well, now the SEC formally proposed new rules that for the first time will require companies to report their greenhouse gas emissions. And that is only happening because of the statistics I just shared with you, which is it's becoming more and more important for individual investors and to have this information. And so therefore more and more important for institutional investors that control a lot of capital. And then another interesting data point. In June 2021, so unbelievably almost a year ago, a small hedge fund by the name of Engine Number One, and I mentioned that they're small because they don't control a lot of capital, but they were able to rally investors, institutions that do control a lot of capital, so that they actually were able to install 3 members on the board of directors of ExxonMobil, which is a big, big deal. I mean, there are plenty, I'm sure Judy knows there are plenty of proposals made at board meetings for large public companies. You can get things proposed. They never pass. I mean, they're just sort of something that's mentioned at the board meeting. But this actually was sort of a piece of information that reverberated in the investing world. So these are just things to show how important sustainable ESG investing is becoming in the institutional world. So that's it for the statistics. Happy to answer any questions later on. So then I want to share another slide. So let me just make sure that it's on the foreground here. Actually, this isn't a slide. This is the United Nations 17 Sustainable Development Goals. Again, Judy has targeted the discussion tonight specifically on environmental or climate change, but I just want to make you aware, and I'm happy to send a link to this website for anyone who's interested, that frankly, all these goals are interconnected. I mean, no poverty, for example, zero hunger. This isn't going to happen if we don't address climate related issues. But that, by the same token, when I work with clients, the first thing I do is I give them a values exercise to do to really understand what is important to you and to name several, 17 goals can be quite overwhelming: gender, equity, quality, education. The one we're talking about tonight is climate action, goal number 13. And just to show you, you could click here and let's see if it comes up. And so there's related topics, there's an overview and targets and indicators that somehow isn't coming up as much, I guess, when I share my screen. But there's a lot that we can address through being more directed about how we align. Here it came up. So the climate crisis continues. There's a lot of statistics here and information to start thinking about what is important to you when you look at your particular investment portfolio. I'm going to stop my share with that. I'm curious. I know I'm not supposed to ask a question. Maybe I'll ask it at the end, but how many people on this call have already started to align or think about aligning their investments with their values? So I see Bob shaking his head. Yes, I know Judy. I see Rachel shaking her head. No, Peter saying yes, which is great. So we're going to focus tonight on goal number 13 of the SDG goals. And Rachel, I'll drop a link before we end the discussion tonight. I think actually, I was about to say the easiest place to start. So let me stop that. Let me say an important place to start is with where we bank. And, Judy brought up that she's going to be part of a demonstration in front of Chase Bank. Well, the Rainforest Network the Rainforest Action Fund has a list of the top funders of fossil fuels. And I'm sorry to say that, the banks we all know, the large money center banks, the ones that have branches everywhere and have a great online presence. For example, JP Morgan Chase, Wells Fargo, Citibank, Bank of America, TD, Morgan Stanley, and Goldman Sachs are among the top funders of fossil fuels around the world. And speaking personally, so I've started to shift my money, and I will tell you names of some good banks as well as a website to go to research. It's very hard. My money had been with Citibank, and for example, one bank that has come up a lot is Amalgamated Bank, as being both community friendly as well as staying away from fossil fuel investments. But the closest branch to Amalgamated Bank is in Co-op City. If you need a certified check, it's hard. And so I want to recognize that this isn't something easy to do, but this is something very, very important to do to move money. So there are several online banks. And Bob is saying it's interesting to look at the rate of change of loans. Yeah. There's an online bank that also has a credit card. The name is Aspiration. There are two other online banks I never heard of: Atmos, ATMOS, and Ando, ANDO, that also are, they will plant a tree for you when you put deposits in. They're very green friendly. banks with branches in our area that are both fund community organizations, people of color, as well as are climate friendly, or Carver Federal Savings Bank. I believe Carver is a Black-owned bank.
Carter?
Carver, C-A-R-V-E-R. And Ponce Bank, P as in Peter, O-N-C-E, and I believe that's Latin American owned bank. Those are both in our area, but you can get a whole list of environmentally friendly banks, and that link I can also put in the chat at mightydeposits.com. And I have the link actually to, within Mighty Deposits, a post on environmentally friendly banks. And another thing you might consider when looking where to bank are credit unions. And I know several, because some credit unions are really area specific, but there's Self-Help Credit Union or Hope Credit Union, or another one, Clean Energy Credit Union. And what I like about these banks is, again, not only are they not, right, so the negative screen, they're not funding fossil fuel projects, but conversely, when you look at these community banks relative to the large, well-known money center banks, they're funding small businesses in our area. They're funding businesses that otherwise have difficulty getting capital. They're funding women-owned businesses locally. It's exciting to read their missions and what they're doing with, our deposits, as opposed to these, huge multinational banks that, again, are the largest funders of fossil fuel. So I feel like it's, on the one hand, low-hanging fruit to look at where we're banking as opposed to, where we're invested, with the caveat that I also recognize that we may have our direct deposits going in, and we may have set up all our payees. And so what I would recommend is starting small, like do research on a bank, and then maybe just put $100 in it, and little by little start moving over, as opposed to making it an all or nothing project, which, and how we do with all or nothing projects. Now I'm going to move over to our stock investments, equity stocks. I'm not going to describe what that is. I'm going to assume you have a working knowledge of investments. And if you don't, I apologize ahead of time. And I just want to keep in mind, say that as you consider changing anything in your investment portfolio, to just be aware, perhaps starting with any taxable investments you have as you make changes. There, of course, you have to be aware of any capital gains implications, but I'm sorry. So you don't want to start with your taxable accounts. You may want to start of making changes within your retirement account, so you don't have to be aware of any capital gains implications. And I want to share, let's see if I can find this link. I want to share a link to a website, As You Sow. And wondering if anyone here is familiar with that website? No, so it's asyousow.org. And let's see, I'm not exactly on the page. Our work, energy and climate, invest your values, maybe so they have a page where you type, right? So here you they have different issues that they consider. Let's assume fossil-free funds. And then you can put in the name of the fund, or what's known as the ticker. It's the letters that represent the funds. And it will tell you how your fund rates on various metrics. Or conversely, you can search for funds that have their fossil fuel grade of A, and then it goes obviously lower from there. So this is a great website for researching what you might already own in your investment portfolio, and see how they have just an amazing database. So you can see how your funds are weighted, and the size of the funds, etc. And as you can see on the previous page, let's see if I can get there again. No, I can't. Maybe it's here. Yeah, that you can look for gender equality funds, gun-free funds, prison-free funds, tobacco-free funds, weapons-free funds, deforestation-free. So they have chosen the values that they're researching, and it's a free online tool for anyone who wants to access it to get a sense of how the funds you own in your investment portfolio align with these values. I did want to mention, so I talked earlier about engine number one. Well, engine number one just started an ETF. An ETF is an exchange traded fund, very low fee relative to mutual funds. I think this fee is 5 basis points. So that's 0.05%, very, very low fee. The ticker, so those are the letters you would type in to see it, is VOTE, VOTE. Their philosophy, which you may or may not agree with, as you can sort of tell by the fact that they now have seats on ExxonMobil's board, is that the best way to affect change is not through divestment, but through engagement. And so this particular ETF is a proxy, if you will, for the S&P 500. However, they are, I use the word proxy, they are voting their proxies. They are putting their money where their mouth is. They are making their demands on corporations known. And I have a slide deck about it, and I'm sure you could just also Google the VOTE ETF to learn about it. But if your philosophy, if that jives with your philosophy that divestment may not be the best way to engage large companies, I frankly, believe that if you get these large companies, for example, to divest their oil and gas fields, you'll just get somebody else to buy them cheaper and won't shut them down. So I do believe with the philosophy that engagement is important and is just as important as just divestment. And so it's an interesting ETF to learn about. And finally, I want to make sure we have time to talk at the end, but there are other asset classes. There are cash alternatives. What I mean by cash alternatives is maybe money that you don't have a long-term time frame for, but you want to earn more than the 40 basis points or so that we're earning in the bank by taking a little bit more risk. And there are 2 alternatives that I would recommend. Calvert, which is also a company that has green mutual funds, has community impact notes that you can buy for as little as $20. They do take some risk, but they've also had, a long history of paying you back at 100 cents on the dollar. And you get some additional yield. And as you can hear from the name, they're community impact notes. They're making an impact in their community. And then there's another great site that I recommend. It's CNote, CNOTE. Let me see what the actual website is, because I think it's mycnote.com is the actual website. And they're sort of amalgamation of a lot of community development funds nationwide. And for that, you pick up, I think you can earn a yield of just under 3%. And it also has a small minimum investment, with the caveat that you have quarterly liquidity. So for example, talking to myself, if you're planning to pay for a wedding in a couple of months, you wouldn't put all the money in. You can get a certain percentage, I think up to a maximum, or a certain percentage of your investment out each quarter, whichever one is higher. But there too, you're funding community projects, you're funding local businesses, and your money is making a difference in the world. And finally, there's also longer term fixed income that, if you're, depending on who I know, for example, I use Schwab as my custody, and Schwab has a whole socially conscious funds list, which will extend to fixed income, which is, not stock, but bond funds, as does USCIF, the organization that I quoted at the beginning for talking about how many dollars are now going into socially responsible investing. So I feel like I spouted a lot of information at you in a short period of time. But I think it's really exciting how many alternatives are available to us, as opposed to what Judy said when she just started learning about this decades ago, where it was really, frankly, these sort of Catholic church do no harm kind of investments. And, happy to talk offline with anyone about what I said tonight. And of course, to answer any questions.
Laura, that is fabulous. Thank you so much.
Thank you.
This was really wonderful. Bob had to jump off, but he wanted to listen to the whole recording to get all the details. And I think I don't know, I'm not good at, I took notes in the chat. And if you click on, what I do is, when I'm listening to various Zoom things and they show websites, I type them in, or they give me a website. If you click on the website, on the link in the chat, it will open a window in your browser to that website. And what I do after the meeting is I copy all those links into a document so I can keep it. Contrary-wise, would you be interested in sending us just the links that you mentioned? Would that be all right? I think somebody asked about the...
I just put in the Mighty Deposits. It's quite a long link. It might be better. I frankly put together a page with the links for myself so that I could easily access them. So I'm happy to send this to anybody.
Oh, would you?
Wants
if you send it to me, I will send it to everyone who showed up.
Perfect.
Because that was a huge amount of information, and it all bears delving into.
Yes.
It's fabulous.
It really does. And there's a lot more. I tried to sort of whittle it down to the resources that I find the most helpful, but there are quite a lot of resources available for anyone who wants to start doing research on their own.
And Vitala has raised her hand. Go ahead, unmute yourself. And then
yeah, you went kind of fast at the end. Hi, Laura. You You went kind of fast at the end and I didn't follow what you said about Schwab. Could you just repeat that, please? I just didn't get it at all.
I could put a link in for that as well, though it's going to be on the page, which is,
No, but I want to know what you said about it.
so I was talking about the fact that Schwab and probably Fidelity, I don't use Fidelity, Schwab has a list of socially conscious funds. And I brought it up specifically if you wanted to look for bond funds, because as you sow doesn't include screens for bond funds. It just has screens for equity funds. But Schwab, and like I said, I'm sure Fidelity also has lists of socially conscious bond funds.
Okay, thank you. I didn't follow that. Thank you.
No worries.
I want to say that years ago, I had money in Fidelity and I asked for climate friendly funds or socially responsible funds. This was back then. And they had no idea what I was talking about. Now, maybe they got the religion since then. I don't know. They probably
have. Yes, yes.
They have. Oh, I see.
I mean, as I told you, right? We're talking about over 3/4, and excuse me, I have to figure out what that light is. Over 3/4 of institutional investors are, saying they're interested. So the world has changed. I would say, not to insult us as I look on the faces on the screen, I mean, millennials are very, as a broad generalization, are very interested in this. And frankly, women are very interested in, I'm leading a women's circle right now where it is amazing because we talk about money. We talk about percentages. Nobody has to talk about dollars and cents, but I'm leading a women's circle and we are doing the research that together each month on different asset classes, and we've each pledged to make a movement in how our money is invested over the 6 months that we're together. And it's really interesting work. There's so much more. Judy, you were way ahead of your time, but now there really is so much available and discussions. I will say, so I was an institutional investor for many years, and my philosophy is such, part of this marketing, if you will, of ESG is that you don't have to give up returns. And I will say, I do recognize that companies that have environmental cleanup and other big liabilities, yes, they'll underperform, but I do think there's a trade-off as more and more money, as more and more people screen for environmentally responsible funds. Theoretically, as capital leaves that, you'll get the, I think there was an article in the Times about a small oil and gas operator who's buying up fields that are being left behind and making money. You may give up some return, but I think we all are willing, we see what's happening. Right. And, you may give up some interest if you leave a bank that's paying you 50 basis points and go to a bank that isn't paying that much. You may give up some convenience. And I think we'd all agree that that's okay, that those kind of trade-offs at the end of the day are okay.
I'd like to ask Laura Solomon to go ahead.
Okay, so let me just take my hand down. There we go. So Laura, I've got a question. So you mentioned in terms of the top 5 banks, do you see any indication or believe that there will be some changing, them changing going forward, especially with the SEC requiring these large corporations to kind of show their greenhouse gases?
I honestly, I don't have an opinion on that. I do think at the end of the day, I'm thinking about, Biden was asked recently, about, we've had this inflation and gas prices at the pump, and that, and he was accused of because of his climate initiatives. And I think he was really frustrated because No, it's the marketplace that demanded that the oil and gas companies stop drilling because, they weren't getting a return on their money. So it wasn't like from the goodness of their hearts. It's, at the end of the day, the investors were demanding, and this is different, not the ESG investors were saying, I want you to buy back shares or pay us a bigger dividend. Stop doing the CapEx. You're not getting, the capital expenditures, the drilling, because you're not getting a return on it. So Biden was frustrated. It's like, it has nothing to do with my initiative. So I think, I don't know. I mean, I know Jamie Dimon at Chase is very upfront about funding community endeavors and, more diversity, equity, and inclusion endeavors. I don't know how quickly it will translate into, funding projects. I think they're more quickly stop funding projects if they're not getting a good return on it. Then the flip side is the Exxon Mobils of the world. There is a change taking place there.
There is and there isn't. Yeah, I just wanted to inject the word greenwashing.
Yeah.
Which is, you have to be very careful. They say all the good things. They say all the things that investors want to hear, and that people.
Goldman Sachs did that this week. They backed a very large loan to Peabody Coal Corporation, which is, I admit, it's a company I used to invest in, but at this point I would not invest in a coal production corporation. But Goldman Sachs, for all their talk, they funded this week.
Jamie Dimon just came out with, he's pushing Biden for a so-called Marshall Plan for Eastern Europe, which is huge investments in gas drilling and piping and LNG and shipping it. It's absolutely the wrong way to go.
We can't count on politicians. They could have been working on this issue 20 years ago. Now we're in crisis, but the marketplace is really the only way to control it. And frankly, if you make gasoline $10 a gallon, we're going to burn a lot less gasoline, but poor people will not be able to drive to their job.
Right.
No. I'm glad I'm not president of the United States. I don't have to make these decisions.
But politicians do have a lot to do with it, because a lot of subsidies and tax discounts have been spent on oil companies over the decades.
Oh yeah, sure.
Billions every year. It's really obscene.
The whole concept of
how we are
depletion
funding, our tax dollars are funding these companies. Yeah. The other thing I wanted to mention is divesting is big now. Divesting the retirement funds of the teachers' retirement fund is up now. They're trying to get the New York State Teachers Retirement Fund divested, and there's a bill before the legislature, and they're hoping to just get them to do it in a rigorous way. BlackRock did a study on companies that have divested from what am I trying to say? I'm losing words. Like the retirement fund has funds that have divested from fossil fuels have not lost any money as a result of it, and have actually done better. So when you say, well, they have to invest for their stockholders or their clients, divesting from fossil fuels is not a loser at all.
Well, it all depends on what they reinvest in, and it all depends upon the timing of the market. The market's been extremely volatile, but if they're divesting at a time when the market is very high and reinvesting at a time when it's low, they're doing very well. But
Well,
you can't really pin it on them.
Right. I guess that was one of my ending thoughts, which is you have to think about why it's important to you to do it. And it is on a continuum from traditional investing for a return to traditional philanthropy for no return. There is a reason why that slide showed a continuum. And I think it's important to understand your values. And if you give up a percent here or there, you know, I think that's something that we should all be okay with.
Laura, thank you very much. I really
Thank you, Laura.
appreciate this time, and I must go. Thank
Okay.
you.
Really
Nice to
appreciate
see
your
you, Ricky.
slides. I thought they were really informative on sources of data that I really did not know existed. That United Nations one especially, it's fascinating.
Yeah, it
Spend some
really
time on that.
is.
Yeah.
I
Thank you.
actually
Thank you.
was able to, pre-COVID, was at a day-long conference at the United Nations on the SDGs. And it was really fascinating. It was also fun to sort of sit in the United Nations and see everything. I will forward the document I put together that has some links. And if it doesn't include any link that I mentioned, I'm not sure it has the UN link, but it's pretty easy to find it online.
Yeah.
I'm happy to forward that along.
Yeah. Susan Freeman, you may know that UN sustainability goals. Are you involved with that? We don't see your, oh, there you are.
Hey,
Hey.
I'm familiar with them, but I haven't worked with them directly. But I think it's wonderful to do things that are really aligning with those, because it really provides a way to, there are people working with those all around the world. And so it sort of creates a language that we can use worldwide. Sort of, so often it seems that it's not always clear what we mean. And so if we have one sort of common set of definitions, sometimes I think that can be helpful.
Right. I was in some kind of a Zoom where they were talking about those 17 goals. And I read, some years ago, I read this big fat book about them, and it's really wonderful. And teaching women is way high up there. And agriculture is way high up there in terms of creating a sustainable climate and earth.
Yeah.
But I thank you for bringing that up. That is a wonderful resource.
And it's interesting. It also, just to be a bit of a skeptic, that's what happens when you get a room full of people. Like, they couldn't narrow it down beyond 17 goals, and again, in the circle that I have with other women, we try to choose among them. It's very hard, and they're interrelated. Everyone is a good, important goal to try to say, well, these are the 4 that are most important. And I think I watched a video that someone put together of the goals, sort of saying that climate is it sort of had us imagine a tiered cake, with climate being the bottom tier, the base tier, that everything grows out of climate justice. That's about it.
Yeah, Vitala, you have your hand up.
I do. I've learned how to do that.
I'm impressed.
Laura, I was looking over my notes and of the things you said, and you mentioned an online bank, and I was looking at some credit unions that are just online only, and I just had some cautions about, I wonder what your experience is or your knowledge is about online banks that don't have a brick and mortar presence in the world. How safe is it? I don't know. I feel a little cautious about that. Wonder what you have to say about that.
So I was going to say they're FDIC insured. They have similar insurance. A credit union, I believe, has a
Yeah,
different.
there's a credit, there's the insurance, yeah.
But so I think there's no risk at all. I've banked online through, I think they're doing more greenwashing, so I'm looking to move my money, but I'm with Ally Bank. That's
Right.
my primarily my bank. And you know, it's fine, and you're insured each deposit up to $250,000. So I wouldn't worry about that. Some of the cash, and I hope I made that clear, that some of the cash alternatives that I named, like a C note or a Calvert Community Bank, they're not insured. They have had very good histories of no loss, but those, as opposed to the banks we're talking about, don't have insurance for your deposits. You're taking some risk in those vehicles.
Okay, but you don't feel like just because it's online only, there's more, there's not an obstacle in any way.
No, the
Thank
bigger
you.
issue with online only banks or banks that aren't in your area are, again, understanding any ATM. First of all, what ATMs can you use? Is there ATM fee reimbursement? Because obviously you're not going to be using their ATMs. Again, this is, you know, an issue of giving up returns, if you will, if, for example, you don't get ATM fee reimbursement. And then, of course, you know, in the off chance in our virtual world that you actually need, like I said, you're closing on you need a certified check. You need you know, when that has happened in the past, again, that I have most of my cash at Ally Bank, I needed to transfer it to a bank that had a local branch so that I could pick up a certified check locally. So those are the issues that you have. You know, how do you deposit a check? With an online bank nowadays, most of us are comfortable taking a picture with our phone, but you're right, you're not going to go to a bank branch and deposit your check. So it's just a comfort level with online transactions and understanding.
I think the other thing I heard about that was that, you know, you don't really have a banker that you build a relationship with a human being. That one of the things someone said, check out with online banking is what kind of accessibility do you have people if you need to talk to someone about your, you know, your account.
About as much accessibility as you have with the large money center banks if you don't have a multi-million-dollar deposit with them. So to me, that's less of a trade-off. If you have had a personal relationship with the banker, Vitala, that's more power to you. But
I do. Yeah, I do.
Rachel Gordon-Bernstein has a question. And Rachel, to do the reactions and then raise hand, but you did it.
And unmute.
And unmute. There you go.
This is something I think I already know the answer to. So the one that I use is Vanguard. So I imagine they have the same thing as Schwab and Fidelity. So I can go to their website and click on.
Yes. The caveat is, I believe Vanguard only has Vanguard funds, right? Like Fidelity and Schwab are clearing agents for many companies. So I'm not aware of Vanguard. I could be completely wrong.
No, I think you're right. It's only Vanguard.
No, but I don't know them to have socially responsible funds. That's what I was saying.
I think years ago there was some Calvert social fund. I mean, this might be going back 20 years already.
No, Vanguard, I mean, Calvert is a fund company. Are they, if you can access them through Vanguard, then that's great. You know what I'm saying? So Vanguard is in and of itself a fund company. As is Fidelity. Oh, I do see that it's they do have ESG funds that reflect. So they do seem to have some socially responsible funds, specifically Vanguard. Fidelity is a fund company, but Fidelity is also a large custodian. Not to get too esoteric, but, you know, so if you have I use Schwab as a custodian, I could use Fidelity as a custodian. Vanguard's not a custodian, Vanguard's a fund company. Anyway,
This
that being
ETF
said,
thing, there's something, I haven't done any of these ETF things, but apparently for some reason, that's a good thing to be doing if you can get one that's environmentally aware.
so again, not to get too esoteric. So a mutual fund is it owns a lot of different, let's say, stocks, and you can only buy it once a day. Like at the end of the day, they decide, what the fund is worth, and you put in an order, I want to buy this much. And often it's actively managed, not all the time. And so that therefore it tends to be more costly. Let's say you're paying 1% to buy a mutual fund. An exchange traded fund, otherwise known as an ETF, is the same idea as a mutual fund. It can own hundreds, if not thousands, of different companies, but it trades constantly like a stock over the course of a day. So you could go in and out, and so then there's some tax advantages to an ETF. There's cost advantages. Most ETFs are not actively managed, so that's changing. Anyway, so it's just sort of the shell. You're sort of describing the shell. A mutual fund is a shell that doesn't trade actively during the day, and an exchange traded fund does trade actively.
Yeah, I could go online and buy it, however it's with an ETF, like right at that moment, rather than trying to figure out what it'll be by the end of the day.
Yes. But that being said, they're both just structures that can have socially responsible stocks, non-socially responsible, specific sectors. You could buy an ETF and just in technology. Well, now they have so many of them. You can, but it's just describing how the investment is structured as opposed to what's within the investment.
I remember seeing, well, I don't remember, that's the problem, what I saw, but there was some article, I see so many things. Vanguard invests itself in fossil fuels, I believe. So the investment companies.
I think Vanguard is
It doesn't have a good
privately
name.
held. Is that, it was John Bogle. Who owns Vanguard?
Which one is in Pennsylvania? Because I keep getting the info
Pennsylvania
about,
Vanguard.
so I think there's going to be some kind of protest about their fossil fuel stuff sometime. People are doing like this long walk from someplace to their
Really?
headquarters and stuff.
Interesting. I did not know that.
I'm going to look on Inside Climate News, which is a huge resource. It's online, insideclimatenews.org.
You try them, Judy. I'll try Grist, and we'll see if we can find this, because I
Right.
don't remember where I
Yes,
saw it.
heard it. Thank you, Susan.
There
Yeah.
was one in November. I see a group of climate demonstrators gathered at their headquarters on Friday, just ahead of the UN Global Climate Change Summit.
Yeah,
The
they're.
president to ask.
Okay, so all right, I won't. I'll stop. I was going to go to
So-
Grist, but
It's interesting, different, as we close along the continuum, because what do I get? I get a lot of publications on impact investing and new sources of capital that are funding community projects and new technologies. And so on the other end, not the divestment end, but the bring
Investment
change in the world. Investment end.
I love the idea of having groups who are working together to not only green their portfolios, but make decisions. Do they want to be activist investors? Do they want to be divestors? And then working together once a month to move in that direction. I think that's just really wonderful.
Thank you. And not to misrepresent what the group is doing, we're studying together, and everybody's making individual decisions for themselves. Because again, it's not all environmental. It's across the spectrum of how, how we each want our dollars to be targeted.
So I don't know if it's possible within the framework of the organization, but I'm wondering if some of the specific environmental organizations could have subcommittees of people who are interested in doing that.
Interesting.
Absolutely. I think there are.
I'm specifically thinking of like Climate Reality Project because there are so many chapters in the area.
Yeah,
Yeah.
we can look on their projects and initiatives and see if they have something about investing.
Mm.
Wow.
I'd love to know what you find out.
Okay.
But
So
this
I
was
think Laura
great.
had asked, Susan had asked Laura for your contact information. I don't know if you want to put that in the chat.
The thing is,
Oh.
if I'm on my phone and I've never figured out how to save the chat from my phone. So if it goes in the chat,
Won't help.
Okay.
unless someone else can save the chat and send it to me.
Well,
I've
or I
never-
can put my contact information on the document that I send to Judy.
That would be fabulous.
Have it.
That will be fabulous.
This was great.
It was great. It's perfect. Thank you so much, Laura.
Thank you. Thank you very
You were
much.
the first
for
person I thought of
organizing.
for this. And
Thank you,
had
Laura. Thank you,
started us
Judy.
off on
Yeah.
incredibly well. And the next one in this series, you have to sign up for each one, but the next one in this series is on April 19th, and it's cryptocurrency.
Wow.
No, it's not. I lied.
No, that's the third one.
That's in May.
Yeah,
The next one is on the carbon market.
right.
And this is, you all saw Bob. Well, Bob knows this guy, Mark. That's how I got a hold of him. And Mark Garfinkel has his own business called Carbon Point Partners, something like that. And he invests and helps people invest in the carbon market in California. And he can explain the ins and the outs of the carbon market and offsets and permits to pollute. And there are people who buy them up
Yep.
to prevent them from being used to pollute.
Oh, interesting.
Oh, yeah.
Wow.
And they increase in value, of course, because they're become more and more rare. So I think it'll be fascinating. And I hope you all come back and tell your friends about it.
Thank you. Thank you very much, Judy and Laura.
Thank
This
you,
was
thank
really
you.
wonderful.
Is
Thank you.
Thank you, Laura.
Thank you,
Wonderful.
Laura.
Interesting.
I'm going
Thank
to
you.
stop.
Thank you very much.
Bye-bye.
Good night.
I
Okay,
know.
stopping.
Bye.
Oh, gosh, record. Stop recording.